Hi, this is Fayaz from trading2wealth.com. We are looking at a chart called TVSMotors. Now, in this area, what is the odd candle here? Obviously this one, right? Now, those who went short, at the break of this swing low, their stop loss got triggered. And those who went long, considering this high as a breakout, they are also in a deep loss. So, it is better to wait this kind of price action, because at least you are away from one losing trade, right? So let's see what happens next. If you look at the next 5 days, there is no much movement to the downside, right? Is there any movement to the downside? No. Price is almost grinding at the same level, and there are a couple of reasons here for us to consider to go long. Price has given a false breakout and it is trying to go down, but it is not going down. It is refusing to go down, right? See, people always try to look at what price action or price is doing, but they are not seeing what price is not doing. Here, price is not going down, right? Also, when you compare the volume on this down candle, the volume on this down candle is lesser when comparing to the volume on this down candle, right? But the close is almost similar. That means previously this area had more sellers. Now price is, after going up, price is coming back to the same area. Now there are less sellers. That means supply has dried up, right? Let's see what is the next candle. Okay, next candle is acting as a sort of confirmation, bullish candle with good volume. So you can enter on top of this. On a break of this candle itself, you can have the stop loss at the low of this candle. But we missed the first day, so we entered on the second day. So we entered on a break of the high of this candle. So let's see what happens next. A small sort of test. Again, if you notice, the volume on the up bars are higher, right? When the price moves higher, the volume is increasing, but as it comes down, the volume is decreasing, right? That means sellers are less, very less. There are less sellers in the market, so we can confidently hold on to our long positions. Okay, the next candle has zoomed in to the previous top. Let's see what do we get there. Okay, some sort of reaction. Again, this is also a sort of test. After a bullish candle, if you get a couple of bars and the volume is getting reduced, that is also considered as a test. So even if you want to move your stop loss to the higher level, yes, you can do that. You can move your stop loss from the lows to the low of this candle, because if the price breaks this candle, that means the trend is changing. As long as the price is holding above the low of this bullish candle, we are safe. Okay, and here we didn't discuss about the target. The target, what we expected was, if you notice this area, if you look at this, the lows are acting as resistance here, and then again it is acting as resistance here, right? The support has becoming resistance a couple of times. So, and it exactly ends up at 40 rupees. So we want to get out when the stock reaches 40 rupees. Okay, again a small corrective reaction. Okay, it is almost to our target and volume is very good. Let's wait for one more day and see what happens. So our target is hit and we got exit around 40. So here is the proof for our entry. Just a minute, let me show you. Here we have entered TVS Motors, 8,000 shares a lot. We entered at 34.70. Let me show you the exit contract. Here it is. So we exited TVS Motors at 40.10, right? So we have made a profit of 43,200 rupees on this trade. To trade this stock, the margin itself is 50,000 rupees. In other words, this stock has generated around 16% returns combined with 5 times leverage, almost 80% return on your investment in less than half a month. So in less than half a month, you have generated around 80 to 85% return on investment. Just think about it, guys. This stuff is very, very powerful. Supply and demand along with price action. If you learn it, you will be reaping the benefits till you live on this planet, right? Fine. If you look at this trade on the risk to reward perspective, so we have taken a risk of around 10,000 rupees, okay, and the reward we have got is about more than 1:4, 40,000, 43,000 rupees we have got, right? So for 10,000 rupees risk and 43,000 rupees reward is 1:4.3. That means even if you lose the next 4 trades, you are still going to be only on break even. You will not be losing your capital. So friends, learn this stuff from us and take these kind of trades. Your profits will grow exponentially and you will be unstoppable. So friends, learn this incredible concept from us and start to trade yourself. Again, thanks for watching this video, and I'll see you in a next real trade video.